E-mini S&Ps will end the week on a down slope. We don't usually talk about that on a Friday. Usually on Fridays, we're talking about stocks making new highs. Everything's great. A lot of buyers, not a whole lot of fear. And while we don't see fear in this sell-off, we are seeing a little bit of profit taking at this point. We've seen the markets rally continuously for several weeks, even months at a time, without any major pullbacks. And at this point, we start to see we have a big week ahead of us as far as data goes. I think maybe just more risk averse coming off the table, taking some of those chips off the table ahead of some key data, ahead of some key meetings makes sense, especially when you saw that tech heavy NASDAQ start to sell off. That was kind of the leader of the sell-off. So we saw the E-minis do the same in spite following the NASDAQ's lead, but not seeing near the percentage losses. So at this point, hovering right above 3,200 in the E-mini S&Ps, it's well off the highs, but certainly not something to generate any fear as we go into the weekend. The VIX index would concur with me, as we did see the VIX index slightly uptick this week, but still well below 30. So not seeing any kind of fear priced into volatility that this is going to be a long-term continuous sell-off. Like I said, this may be just a little bit of a hiccup. We've got major events. The market sees that, understands that, and sees some of maybe this is a short-term move to the downside, and certainly not one that's going to break any significant support levels. So VIX index along with me saying, hey, this isn't a fear trade. And lastly, what do we have next week, which caused probably a lot of this selling? Well, we've got claims and advanced second quarter GDP, which will be key. And GDP, while it's going to be an abysmal number, has already been fully priced into the market. So I don't think anything around 35% down for second quarter GDP would scare people if you told them that. But we've been talking about this. Those are the lockdown pandemic months that we've already talked about and been priced fully into the market. The Fed meets next week. I don't see them doing a whole lot at this point. Probably just talking more of the same, waiting for more data, waiting for the recovery, keeping rates where they are for the foreseeable future. I don't see that changing. The big what if in equity markets, at least in the short term, well, there's two. One is going to be China. China has adversely affected risk takers. Go back to 2018. Remember the trade deals that went back and forth. We saw equity markets do the same. That could be a variable that hasn't been fully priced. Likewise, the stimulus coming from the federal government. Will they get it? Won't they? If they don't get it, the market's fully priced that they will get it. So if they don't get it, you can expect some big declines. And as we said earlier, from the VIX index and from the sentiment that we're getting from the equity indices themselves, this doesn't seem like it's even possible. So expect the Fed stimulus to go through. Maybe not exactly how it was originally planned, but certainly they have to get something through, or we could see equity markets tumble. So heading into the weekend, a bit of a downer on a Friday, which is rare, but certainly not seeing any fear priced into these markets, and likely will trade sideways through the Fed meeting next week and through GDP and claims.